Hello to all traders and welcome back to another market review brought to you by Orbex. So we're looking at indices today after the Dow has been a little bit subdued in the last few trading sessions, and it's due to probably the earnings sentiment that's been going around. We've got big earnings season coming up this week: Microsoft, Facebook, Coca-Cola, just to name a few. Last week, obviously, and the week before, we had some other big names coming out that just failed to get that. Not only earnings per share and estimates going forward, but also for Q2 and Q3, the outlook is not really looking too great. So this is what a lot of sentiment diversion has been happening in the markets. We've seen the Dow trying to break this V-shaped recovery. It's just getting quite subdued and having a lot of resistance at some particular levels, namely the 34,000 area. So this is what we're going to look at today. S&P and the Nasdaq running pretty much in tandem. Looking likely that they will be probably on the downside as well if we don't get these earnings seasons up to date and up and running. Because if you remember when the pandemic did stop and lockdowns were stopping as well, we saw obviously the grand reopening of the globe, and this meant that apart from Tesla, who were obviously beating earnings every quarter, we had other companies really strongly getting back on their feet as well. So this is something we're going to look at in the earnings report as well. Excuse me, and seeing where the dollar can really start pushing in the near term as well. So looking on Dow, first of all, as I said, we're looking a little bit subdued, roughly around this 34,000 area. As you can see here, we had this V-shaped recovery that kind of halted when the Dow really started getting just over well around 34,000 and just over there as well. But if we go back a few sessions where we saw this vast V-shaped recovery after this double bottom, as you can see here, very strong resistance across the board, roughly around the mid 34,000 area. So this has been a very strong resistance for quite a long time. We did expect this choppy consolidation for quite a while before it was tested again, then dropped. Now it seems to be in the realm of testing, but now having a slight consolidation. So if we do not test this particular area in the next couple of weeks or so, and we start moving lower, then there could be another falter in the Dow going right back down to 32, 31,000. So this is something we're looking out for in the near term at least. But it's good opportunistic bets as well that we're looking at, and we're just seeing what the outcomes are as well. But looking on the 4 hour chart as well, just bring the screen in slightly so it's a little bit easier to see here. Just drag that out a little bit. So just looking likely now, just remove these drawings. It's a little bit easy to see. So as you can see here, vast consolidation for the near term at least. But more surprisingly, just this bearish divergence that we're seeing on the RSI as well, which could start pulling prices lower, which we have seen a slight bear channel being emerged as well. So just keep an eye out for this 34,000 area, because we are looking likely that this could be heavy resistance with no support in the near term as well. So the Dow really riding on not only what the Fed is going to be saying in its meeting next month, but also for the earnings season that's coming up as well. So we said about we're going to speak about the S&P as well. Apologies for that, just went onto the wrong screen. So with the Dow, as you can, so like the Dow, we can see here V-shaped recovery, really starting to see some heavy resistance, and now we're seeing a plateau, and these indices are moving in tandem because naturally they're all waiting for the same amount of information coming out of earnings season as well. So really big moves in the market could happen if the likes of Microsoft, which is later today, and other big corporations, big tech stocks that are expected possibly to miss their mark in the near term as well. But if we're looking on the charts, as I said, for the near term at least, this particular area is pretty much moving in tandem like the Dow. If we go on the 4 hour chart as well, we are now looking likely, as you can see, very nice move there. Very predictable as well, because once we hit this area of support and prices started moving back to the upside, it was most probably going to be a likelihood that we will start testing the previous highs. So just keep an eye out for that every time there is a downturn in the market, just to see where consumer and trader sentiment is looking likely. So at the moment, as you can see, very clear resistance roughly about this level, just under the 4,100 level. We are trading just above the 4,100 level, so just about 4,500 points in the near term. Sorry, 30, 40 points, 40, yeah, I was right the first time. This amount of move in the market could actually start carrying a slight consolidation like the Dow, and then we could see where the next signal is. If we do test this area, then expect some heavy resistance for it to start moving lower as well. So we'll see what happens. Again, slight bearish divergence on the RSI just starting to form here, which could see another bearish channel exactly like the Dow. So keep an eye out for the big indices in America, big earnings season as well. A bit not like we've seen in the past few earnings seasons where these big corporations have been guaranteed to eclipse their earnings per share and their estimates and their profits. It just seems a little bit more subdued now. So just keep an eye out for that. And we'll see what happens in tomorrow's news. So join me then and have a great trading day ahead. Bye for now.